Welcome to Market Call. We are talking tech stocks with our guest Kim Bolton of Black Swan Dexteritas. Global technology stocks, obviously the focus often on the US players. 1-855-326-6266 is the number to call Kim with your questions, or you can email us anytime. marketcall@bnnbloomberg.ca. Kim, thanks very much once again for joining us.
Thanks, Andy. Good to be back.
Broadly speaking, how are you positioning your tech holdings right now? Are there themes that you think will continue to work, as they say, in 2021?
Yeah, right now in the fund, we're about 94, 95% fully invested, a little bit of cash, but we have about a 63% short equity indice hedge overlay on top of that stock portfolio. So what that sort of tells everyone is that we still see value because, we're 94% invested, but the hedge tells us that there are some warning signals out there. Valuations have got a bit steep. However, you do have to pay attention to the monetary stimulus, and we're probably going to see around another $3 trillion of US dollars of liquidity expected to reach the markets in 2021. So that'll give some ammunition to the bulls. But I think this scenario sort of plays into buy the rumor and sell the news. Meaning that, once the widespread vaccinations create a herd immunity and global economies start to open up, those liquidity injections from the central banks will slow, and, the market fundamentals and technicals should again become important. The forward-looking nature of the stock market means selling the news will happen well in advance of those global economies opening up. So going into 2021, we like investments that are more sort of GARPy, large cap names like Ericsson, Microsoft, NVIDIA, Alibaba. There are 4 hardware and software firms that are leaders out there. We also like semiconductors. We've liked them, pretty well for the last 2 to 3 years. Some e-commerce players like PayPal and Shopify. And then we sort of have a select number of half a dozen themes and trends of electrification, 5G, so on.
We always get so many calls for you, Kim. Let's keep it moving. Kim Bolton is here to take your questions on tech stocks. 1-855-326-6266 or email us marketcall@bnnbloomberg.ca. Kim Bolton is our guest today. On Market Call, he's taking your questions on tech stocks. 1-855-326-6266. We are also taking emails. Byron has sent us an email. Byron wants to know about CyberArk. I added a small position. I might buy some more. Do you still like the stock?
Hi, Byron. Well, no, we actually took profit in CyberArk. However, we're waiting for it to move lower. And I think you will see it sort of get into the lower 150s and upper 140s. But let me just sort of back up. CyberArk, they're a category leader in the privileged access management segment. So they're a cybersecurity company in this privileged access management segment of security. It's quite popular. You've had the recent privileged breaches at Marriott, at Equifax, Uber, and then more recently SolarWinds. And these breaches are inherently becoming a real threat to businesses as companies acquire more sensitive customer data. And it's really positioning the whole privileged access management for growth. And CyberArk is the leader, but that's why it's so popular. And we actually had we have a price target here of 160.60, and it's currently trading at 162.70. So that's why I'm recommending that you, as we are, that just wait for it. It'll come down to the lower 150s and the upper 140s.
Okay, so don't be chasing that one. We have an email from Claudio. Claudio wants to know about Unity software. Can you remind us what they do, Kim?
Yeah, Unity software. This is an interesting company. It's been around for a while. It's been around since 2004, and then IPO'd in September 17th of last fall. With a valuation of around $14 billion. So what they do is that they're a mobile gaming platform toolkit, and it allows creators with little or no technical knowledge to program games and simulations. They've really built a lot of their momentum out of acquisitions. They bought a company, Finger Food, that's right, out in Vancouver back last May. And it's just a great example of how they've actually been able to acquire companies around to sort of build on their momentum. So the tools for game development range all the way from, development environments, simulation environment, crash management. And so they've had other acquisitions this year of this is Atromatrix. It's an AI material creation. They had a couple in December. They've now got a market cap of just over 40 billion. It charts really, really nicely because it has a bit of a flag formation. So it's got to hold that $137 level. But we're actually watching it. We don't own it right now, but that flag formation is an upward flag, and we're waiting for a break of that $160 level to actually buy into that.
Chris is calling from Hamilton, Ontario. Go ahead, Chris.
Oh, good afternoon, gentlemen. Thanks for taking my call.
Hi there.
I'd like Kim's view on Apple. I hold some, and it's an 11% holding in my portfolio. So I was thinking of reducing it to, say, around 5 or 6%. And I just wondered what your outlook was, or whether you'd get rid of it entirely. Thanks very much.
Thanks a million.
Thanks. Yep. Thanks, Chris. So here we are, just shy of $136, up another 3% today. We did own it. We sold it, I believe, at about 128. So, they came out with their iPhone 12. And they talk about how this is the 5G enabled phone, and it does. The only problem is that the apps are actually geared to 3 and 4G. So I think there are other ways of actually playing. We look at Apple as an ecosystem. And there are other players within that you can actually play, on the semiconductor for the CPUs and the GPUs. But we can talk about that later, like with Qualcomm and so on. But the radio frequency folks of Skyworks. So rather than buying Apple, and Chris, I'd suggest maybe even looking at some of the supply chain. Take a little bit of money, because I think Apple's got a little over its skis here, up at 135 and 136. But you can still participate in that Apple ecosystem of buying some of the supply chain behind it. Great example would be Skyworks and Qualcomm.
Skyworks. And what was that one? Skyworks? What's their symbol, Kim, offhand?
Oh, boy. Skyworks.
Oh, that's okay. It doesn't.
No.
I'm showing Skyworks Solutions, SWKS. I'm sorry about
yes.
SWKS.
Yeah. So they are the king of the radio frequency, and you can imagine if the iPhone 12 and a lot of these smartphones coming out are going to have 5G capability, and they've really had to sort of remodel the radio frequency side of it. And Skyworks is one of the leaders when it comes to the radio frequency. You know, they have a lot of other products, but that's one of the biggest ones that they have.
Okay. We're going to take a break. Kim Bolton of Black Swan Dexteritas is taking your questions on tech stocks. 1-855-326-6266. We'll be right back. Mark in Alexandria, go ahead, please.
Yes, good afternoon, gentlemen. I have a question with regards to the buildup. If we take a look at the NASDAQ, for example, you know, we've had a nice sort of like 9-10 months of a nice bull run, and taking probably some profits off the table and putting it maybe into puts in QQQ. And I'd like to get Kim's thoughts on that, and maybe even if you could explain maybe the type of put that I could maybe look at maybe in 6 months. Anyway, if I get input on that, that would be great. Thank you very much.
Thank you.
Thank you very much, sir, for the call. Well, as a technology portfolio manager, you always have the triple Q on the screen. That's the Invesco triple Q. You know, it's one of the biggest technology ETFs out there. It's about 155 billion.
Wow.
So you're right. You've had quite a run. Buying some puts going out 6 months. I would actually recommend that maybe you would ladder some puts. So right now, you have the triple Q trading at, say, 325. And if you actually chart it going out, you know, you can probably put some strike prices starting down, you know, 1 month out around 310. There's some support down here around 300. And then maybe do it about every $10 down going out each month. You know, the hardest part of doing puts is there are so many moving pieces in coming up with the pricing of that, all the way from the strike to the expiration date to the volatility and so on. So that's when it comes to protection, and this is exactly what we do in our hedge fund. So we don't use the triple Q. We actually use the NASDAQ 100. You know, for example, we may have some robotic stocks over in Japan, so we'll use some puts on the Nikkei 225. So it is. I very much recommend that you get some protection in there. That's exactly the way we manage our fund. We try to maintain fully invested, but we have this hedge overlay of short equity indice overlay on top of the fully invested stock portfolio. So what you're thinking of doing with respect to your technology portfolio of actually looking at the triple Q ETF puts is a good idea, but I would ladder it. And sort of laddering like what people talk about in the fixed income market. But it just lowers your risk to actually trying to exactly get the right expiration, the right strike, and also managing the volatility. Which is an important ingredient into the pricing on puts. Hopefully that made sense for you.
Okay, there's a lot of issues there, but thanks for that great question, Mark. Peter in Vancouver, go ahead, please.
Thank you. All the best for the new year to two of my favorites, Andy the Great, and Kim the Great. Oh, Andy, please say all the best to your two beautiful dogs.
Thank you. I will to my ladies. Yes, I will.
Yeah.
Okay, my Havanese ladies. Yes.
Kim the Great, thank you very much for your top pick, Asana, ASAN. You tipped it at 23 in November. Now it's 39, past your target price of 36. Can I have your expert opinion? What to do with this stock? I bought it, sell at 8, or take some profit? Thank you very much, Kim the Great.
Asana.
Thank you,
Okay.
Peter. Happy New Year to you, Peter. Asana, wasn't that an interesting stock, to watch? This is one of the ones that did a direct listing because they just didn't want to pay all those fees to Wall Street to do an IPO, so they did a direct listing. So it came out at the beginning of October, right around, just around 20, I guess it was around $24. And then it sort of went down to about 20, and it just sort of fell off the radar. And I think it was because of that direct listing. So for those that don't own it, Asana, it's a leader in the collaboration and work management space, which is a pretty busy space these days. It has, other players in that are, of course, Salesforce, Smartsheet, Salesforce bought Slack, Atlassian is also involved in that. We love that stock. We actually use the Asana solution in our collaboration and work management. And the growth has been faster than any of the other companies. Valuation is based on a company growing about 30% per year. What we particularly got drawn to it are the co-founders. Co-founders of Asana are Dustin Moskovitz and Justin Rosenstein. You may recognize those names because they were the partners of Mr. Zuckerberg from Facebook. So you're right, we did have, when I recommended it back in November, back in November it was trading just over $20, and we recommended it and we said it was going to go up to 36. It's one of the challenges that we have in the technology space these days is to keep on top of the companies because they keep going up, and really whether our price targets are right. So we currently have a price target on this of $42. It's trading at about $39.60. So if you own it, I'd hold it. If you don't own it, I think you may get a chance because we do see a possibility of a correction that you could get it down in the low 30s. But we love this company.
Oh. Okay, no problem. You love it. Mark in Ottawa, go ahead. Oh, I'm sorry. I think we have to take a break. Mark, thanks for your patience. We'll get you after this. We're going to have a look at Kim's past picks. Kim was on December 6th of 2019, so it's a while ago. Advanced Micro was your first idea, Kim. Whoa, this stock, 125% return.
Yikes. Currently trading, just shy of $90. We actually, as I mentioned before, was the challenge of in this space is keeping up with the price targets and the incoming information. So we actually have a price target here of $104, currently trading just shy of $90. So AMD, Advanced Micro Devices, very much the darling out there. It's they develop computer processors and related technologies for business and consumer markets. If you own it, hold on to it. I think you can probably wait for the lower 80s or upper 70s, and we really think these prices will come. Why is it traveled so quickly? It's just a fantastically run company. They're in the right place at the right time. on the semiconductor as a designer. But there are three reasons why we especially like it. They came out with an aggressive product strategy of these 7 nanometer GPUs, graphic processing units, and central processing units. Number 2, AMD is buying Xilinx. So remember, Intel does over $70 billion of annual revenues in this space. But after AMD closes the Xilinx deal, they're going to have an enormous 110 billion total addressable market. And then thirdly, why we like it, there was a lot of aggressive institutional buying back in the second and third quarter of 2020. And institutions bought up about 10% of AMD's float. And that's very sticky money. So yeah, we still like it.
Digital Realty, not a bad pop, 22%.
Yeah. Digital Realty, to us, we don't own it now. We did own it. The one that we own in this space is Equinix. Digital Realty, so they're a carrier-neutral data center. And actually, Equinix is the data center that we particularly like these days. Actually rents or leases space from Digital Realty. It recently bought a Netherlands-based information technology services company that is very, very complementary to it. And on top of it, DLR's got a 3% dividend yield to go along with its 11% CAGR. So we have a 12-month price target here of DLR of $165.50. And it's currently trading at just shy of 141. So it's still got some runway left.
Okay, so you'd still, and Kim, sorry, you touched on this. What do they do again, Digital Realty?
Okay, so they're one of the big players out there that have these data center houses. And so they will offer their data center houses to the likes of, Amazon or to Microsoft Azure, right? And so they actually have the physical properties.
Okay, no problem. Yandex, nice pop, 72%. Remind us what they do, Kim.
I remember when you and I talked about this over a year ago.
Yeah.
So Yandex is a Russian technology company. And it's sort of like the Alphabet or Google of Russia. It's a big company. It's got 10,000 employees. It's got revenues of north of $50 billion. It's got a market cap of 24 billion, and it's growing at like 40% year over year. And it's very, very diversified. It's got the search engine like a Google. It's got a food delivery service. It's got e-commerce. It's got transportation, media. It's even into self-driving cars. We still think it's got some runway left here. YMDX. And we have a price target here of 72, and it's currently just trading shy of 68. So it's still got a little bit left. We're still hanging in there because, it does trade on the NASDAQ, but I think Yandex could possibly get into the NASDAQ 100 this year, which will give it an additional pop. And that's very much thanks to Ozon's IPO. Ozon is the another big company, Russian company that trades on the NASDAQ too, and it's got a lot of popularity in that. So currently 68, got a $72 price target.
Okay, we are going to take a break. Kim Bolton is taking your questions on tech stocks today. 1-855-326-6266. Mark in Ottawa, you've been very patient. Go ahead, please.
No problem, Andy. Thanks. Kim,
Thanks.
I've owned Adobe for about 3 years now. I bought it at 218, and it's more than doubled. And I really like this stock. It seems to be like a picks and shovels kind of operation for a gold mine type thing, or a miner. And I'm just wondering, it's rolling over here a bit. In the last 6 months, there's just barely at its 200-day moving average. But when I look at a year to date, it's still over 30%. I'm thinking of adding to this stock if it goes down a little lower, and it's only about 2.5% of my portfolio. What are your thoughts?
Thanks, Mark. Well, for those that have their own single stock technology portfolio, this is one of the ones that you need to have in it. And really for a number of reasons, but the two that stand out to me are they have a huge economic moat, and number two, they still have some long-term upsides. So, Mark, here it is trading at 470. We have a 12-month price target of 557, which is about the middle of the road when it comes to all the analysts out there. So we're not high at all on this, too high on this at all. So just to back up, Adobe, symbol is ADBE. So this is a one-stop shop for product design, content creation, marketing, web and mobile commerce. They've done a terrific job building it organically, but also selectively buying and acquiring some companies. One of the things that really set them off on a great runway was their purchase a couple of years ago of Magento. That was really got them into the e-commerce software as a service, as a software, e-commerce software as a service vendor. But there are three reasons why we like Adobe. Number one, their historical earnings per share growth is running at 52%. You can't find that very often. Number two, year over year cash flow for Adobe is north of 25%. And then number three, the current year earnings estimates for Adobe have been revised upwards. A lot of technology companies refrained from actually raising guidance or even giving guidance back in the summer of last year, but they just have a tremendous business. So we love this company. So Mark, 470, we got a 557 price target, 12-month price target.
I'm very excited. We are now heading to Guadalajara, Mexico. Andrew is on the line. Go ahead, Andrew.
Hello there. Yes, a bit of a coronacation. Kim, I'm looking at Facebook for the VR augmented reality technologies. You mentioned art the other day for its holographic capabilities. Is there anything in between the two that you would recommend for more of a pure play? Thank you so much.
So if I understand it correctly, Andrew, you like Facebook and also art media, particularly for that AR capability. We own both. I would stick with the Facebook and to try to find someone in between. That's a good little project, but which I'm not going to do right now. But Andrew, give me a call later, and we can talk about it. But the reason we like Facebook, so here we are, Facebook, currently trading at there we are, 270, just 272. We have a 12-month price target on Facebook of $314. It's really being held back because of all the regulatory issues. that they're being faced, and especially with the new administration and Congress down in the States, and it's one of those companies that is actually cheap, and that's pretty hard to find out there. But they have everything running, and then when it comes to artificial reality, AR, and the VR side. They have the resources to be a leader in that. So I would actually stick with Facebook on this, Andrew. But give me a call later.
Okay. Okay. Just very quickly, I just want to ask about Twitter, Kim. We're very tight. We have to go to break soon. Bloomberg is reporting that it's been one of the worst stocks in the S&P 500, in fact, possibly the worst. After, obviously, a lot of the buzz is gone after President Trump's departure. It was perhaps his favorite platform. Would you be a buyer of Twitter?
No, we've owned it. And then it got to a price target, and we just took the money off the table. We're watching it. Twitter has lost a lot of their followers over to Signal, over to Telegram, Pinterest, and Snapchat. So, it's sort of similar. I was reading an article the other day about from the Washington Post, and they said during the Trump administration, their viewership had actually tripled, and they were a bit concerned now that Trump wasn't going to be there. So, I'd let it settle and see where it goes from there. Although I did, I signed up to Mr. Biden's Twitter, and he is on Twitter, so he's, they still have a good following.
Okay. Shane in Ottawa will be up after the break asking about CGI, but we're going to take a break. Kim Bolton taking your questions on tech stocks. Shane in Ottawa, go ahead, please.
Hi, thanks for taking my call. I love the show.
Pleasure.
I just wanted to ask about CGI. I looked at the beginning of the pandemic into what's going to be necessary, and I figured I'll buy the picks and shovels, what company is not going to need to go online, what company is not going to need to go and protect themselves cybersecurity-wise, and I figured companies like WSP and Accenture and CGI would do really well. The two other ones really knocked it out of the park. And CGI, am I missing something? I think it looks a bit bargainish now. It hasn't even caught up with its pre-pandemic peak, where they have a graph that looks like it's beating Berkshire Hathaway over the past 10 years. So just wondering if I'm missing something. Thank you.
And I'll try to keep this as succinct as I can. So, Shane, you've done your homework. I'll talk a little bit about CGI, but I'll also talk about some of those competitors and what we like. So CGI is very competitive in the IT services sector when it comes to infrastructure and applications, relationship building, and software-based solutions. We follow CGI very, very carefully, as a lot of these players in the IT services sector. Client feedback, and we get this client feedback actually from Gartner Research, which we use as a resource. The world's biggest IT research company, and they just point to some of the challenges of CGI when it comes to recommending reinvest opportunities for their clients. CGI, in our opinion, reflects two issues. Number one, booking services demand is very strong, but the conversions, have slowed. And I think that's what's sort of holding back the stock. Number two, SAP's warning has cautioned sort of CGI investors. Now, Shane, you mentioned a couple of the other players in this space on the IT services sector. Infosys, that's a big Indian-based IT services company. There's EPAM, that's actually out of Belarus. And it's a fascinating company. But the one we particularly like, and it's rich, is Accenture, and it's just the leader. And we'll talk about that a little bit later because that's one of our top picks. But thanks, Shane.
Okay. Mary in Burlington, Ontario, go ahead, please.
Hi, Andy. Hi, Kim. Thanks so much for taking my call.
Yeah.
Kim,
Hey,
I'm wondering about open text. You know, a lot of the other companies have taken off and done quite well, but open text seems to be stuck in a range, and I'm just wondering if you think it's worth buying or worth giving a pass. Thanks very much. I'll hang up and listen.
Thank you for the call. I'm just pulling OTEX. So it's currently trading at just shy of $47. You know, this is such a well-run company, and its products and services have a very, very strong following. And it's trading at $47. We actually have a 12-month price target of 52. So it's got a little bit left in it. So OpenText, it develops and sells enterprise information management software, IEM, which really helps enterprises and firms digitalize the processes and supply chains through analytics and AI-powered intelligence solutions. For the firms to actually make better decision making. You can see why it's so popular. If they do what they say they do, and they do, this is why it's so popular out there. You know, they've built it organically. They've also bought some companies. They bought Carbonite. They recently last year they bought Xmedius, which really provides them a range of secure information transfer and communications, and it gives them great cross-selling. So, you know, do we like it here? I think we'd actually like to wait for it to sort of get a pullback into the low 40s, but you know, I've said this before, and it just doesn't get a pullback. So, but we have a price. Yeah. So I'll leave it at that.
Okay, it's one of those that it doesn't give you the pullback. Yeah.
Yeah. Exactly.
We are okay. We are out of time. Oh my goodness, we got to go to top picks after this. You're watching Market Call. Kim, your first idea is Accenture. I always think of them as a giant consulting firm, but remind us what the tech angle is here.
Okay. So these are the kings of the IT consulting sector. And they've been that for ages. You know, Andy, the company's client base includes more than 75% of the Fortune Global 500. 97 of the top 100 clients of Accenture have partnered with Accenture for over 10 years. So basically, what Accenture does is that, you know, there's this ongoing transition into the cloud, and people need help. Companies need help to actually do that transition. And so Accenture has partnered with, you know, the big ones of Amazon and Microsoft and Oracle and Alibaba and Google, and they help those people actually transition over into the cloud. But they do a lot more beyond that. Andy, do we have that slide entitled AI and Machine Learning on here?
I'm not sure. I'll ask the control room if they can. Okay, I don't think we have that one right now, Kim, but carry on.
So Accenture is very much involved in that sort of whole AI and machine learning side. They're on the software side. We're going to be talking about Qualcomm in a second, which is on the hardware side. But you know, Accenture is a consulting company, and they just have the credentials to actually. So when a bank or a firm out there says, "Okay, I want to move over into the cloud. How do I do this? They go to Gartner Research, and Gartner Research says, okay, you should talk to CGI, like Shane was talking before, or Accenture, or InfoHus. And we actually have it's currently trading, I think, Accenture, the symbol is ACN. It's currently trading, I think, at about 260. We have a 12-month price target of 280. So to me, if you own it, great. If you don't own it, I'd buy a third here, buy another third down at 245, and buy a final third, if you're lucky, down at 225.
Okay, let's keep it moving, Kim. We are tight for time. Your next idea is Qualcomm.
Yeah. So again, this is in that whole AI and machine learning space, but they're on the hardware side. You know, they're the ones that produce the central processing units and the graphic processing units to send that data over into the data storage places. So Qualcomm currently right now, what's it trading at? Andy, I think it's trading, there it is, 163.
I'll call that up in a sec.
And we have a 12-month price target of 168. So, you know, they create intellectual properties. They're in the semiconductors and software. They're a fabless guy. So they don't actually manufacture it, they outsource it. But they are in a leadership position when it comes to 5G, which is going to give them very, very strong margins. Lastly, they just recently bought a company called Nuvia, which is going to give them a great venue over into the autonomous driving and that system on the chip side. So.
Okay. Kim, we're tight for time. I'm sorry about that. Your next company, just give us the quick rundown, if you would. C3.ai. What do they do? Why do you like them?
Okay, C3.ai. They are on the software side of AI and machine learning. You always hear about Palantir. We own Palantir, and then we rotated over into C3.ai. So they do, you know, enterprise-grade AI. But basically, this is a great boon for enterprises out there who need to incorporate artificial intelligence into the process, but simply lack the technical resources to do it. And this actually allows them. You don't have to have coders. It provides access to the data. You don't have to have that data science training, but it allows the performing of data science tasks. So I would recommend buy a position here around 130, add down at 120, and a final third at 110. We have a 12-month price target of $147.
Kim, always great talking to you. Thank you very much indeed.
Great to be with you. Thank you.
Kim Bolton of Black Swan Dexteritas. Before we go, let's have a quick look at the markets and see how they are trading. Now, it looks like some fairly weak-looking jobs data out of the States has discouraged some investors. We are seeing modest selling across the broad US market. Very modest, though. You can see the S&P 500 down only about 1/10 of 1%. The Dow up about 1/5 of 1%. The Nasdaq, though, hanging in. Let's move on and look at the TSX and see how that's doing today. And the TSX, slipping slightly, still below that $18,000 record level it got to just not so long ago, and it's still up though. Up 2% over the past year. And let's check in finally on oil. There are fears, of course, that OPEC, despite the commitment, the extraordinary commitment to 1 million barrel a day unilateral production cuts by the Saudis during February and March, that OPEC, other members will be tempted to cheat. We just heard from Dan Sabucci on commodities of SAF Group warning that that could be a threat to the oil price recovery, and he thinks WTI might get to $60 later this year, but it will be towards the end of the year. Let's have a look at the US dollar index, an important determinant of commodity prices. We have seen strength in the US dollar, and you can see that is feeding through into a weaker US dollar today. The US currency that's holding that 6% decline over the past year against its world counterparts, notably, of course, the euro. And let's have a quick look at TC Energy, because of course the perception among some investors is that now that Keystone XL is apparently out of the question, that frees the company up. It removes any cloud that was hanging over, any uncertainty over the Keystone XL process. It's interesting though, if that one goes, it really plays into Enbridge's court here, because Enbridge gets a tighter lock on Canadian oil exports south, and we know that Enbridge is at odds with some major oil shippers over the terms of getting oil onto their pipelines. Thanks for watching Market Call. We'll be back tomorrow.